The terms of an audit engagement are covered in ISA 210. There are three important learning outcomes that you must understand from this standard. In this clip, we will look at the first two. The first relates to the preconditions of an audit. The preconditions are requirements that must be satisfied prior to the auditor accepting an engagement. If these conditions cannot be satisfied, the auditor cannot accept the audit unless there is a legal requirement to do so. There are two preconditions. The first relates to the financial reporting framework that the entity has used to prepare the financial statements. The auditor is required to assess if the financial reporting framework used is acceptable. For example, Entity X is a large listed company that is considered to be a public interest entity. The CEO believes in simplicity, and to him the International Financial Reporting Standards, or IFRS, is too complex. Thus, he instructed the finance team to prepare the financial statements of Entity X using IFRS for SMEs instead. Has the first precondition for an audit been satisfied? The answer is no. The listing requirements in most jurisdictions oblige companies to use IFRS when preparing its financial statements. IFRS for SMEs sets out thresholds which indicate which companies should use the framework. Listed companies and public interest entities are scoped out of these thresholds. Thus, it would not be acceptable to use IFRS for SMEs. Accordingly, the first precondition has not been satisfied. The second precondition is for management of the entity to acknowledge and agree to certain terms and responsibilities. Specifically, management of the entity must agree that they are responsible for the preparation of the financial statements as well as for internal controls. Management must also agree to not limit access to the auditor and to provide all relevant information. One of the learning objectives in Module 2 is to be able to prepare an audit engagement letter. In order to satisfy this learning objective, you first need to know what goes into the audit engagement letter. ISA 210 paragraph 10 sets out the items to be included. For example, the agreed terms, the scope and objectives, the responsibilities of management and the auditor, and the applicable financial reporting framework that was used, as well as the form and content of any reports to be issued by the auditor. You should also note that Appendix 1 of ISA 210 includes a template engagement letter. To recap, there are three important learning outcomes from ISA 210 relating to the terms of an audit engagement. In this clip, we looked at the first two relating to preconditions of an audit and items to be included in an engagement letter.